I think everyone needs a network and a community to do this type of investing.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I'm your host, Todd Dexheimer, and excited to have Jim Pfeifer back on the show. Jim, how are you doing today?
I'm doing great. Thanks for having me back on.
Absolutely. So, man, it's been a while, but we had Jim on. He, is the CEO of Left Field Investors, and Left Field is now Passive Pockets. And so I really wanted to bring Jim back on the show to talk about this transition to Passive Pockets, what Left Field Investors, what that means for Left Field Investors, and for those who are fans of Left Field Investors or maybe just learning about Left Field, like what does this mean? What's the change? Or who's, people been hearing about Passive Pockets. Those of you who don't know Passive Pockets, it is bigger pockets. But of course, as it sounds, it's on the passive side. So, Jim, welcome to the show. Give our listeners a quick reminder of your background, and we'll dive in.
Sure. I was just working in business for a number of years, and I was always a finance stock market guy. I was pretty confident that stock market mutual funds, that's the way to build wealth. Became an accidental landlord. In 2008, we couldn't sell our house when we built a new one, so I became a landlord, and it completely changed my outlook. I was like, oh, wow, this money just comes in and you don't have to work for it. It just shows up every month. I didn't like being an active landlord, so I went what I then thought was passive, which I just started buying turnkey single family properties, and then bought a couple multis and thought those were passive. They certainly were not. I was constantly battling property managers and tenants, and I was a terrible asset manager. And that's when I discovered this thing called real estate syndications, where I can hire the asset manager who will then manage the asset for me, right? Manage the property. It allows me to diversify into different asset classes, different locations. And it really lets me focus on what I want to focus on, which is finding good operators, finding good deals. And as part of that, I wanted a community because I think it's important it's very hard. These are long-term deals that are illiquid, completely out of your control. And so finding quality operators and vetting them and then analyzing the deals is complicated because you're not going to know for 5 years whether you made the right choice or not. And so a community is super helpful. And so I just started a little mastermind in Columbus, Ohio, where I live. It's going to be 12 people. Pandemic came. We couldn't meet in person. We went online. Next thing you know, we have 2,500 members, and we became Left Field Investors, which was a community focused on helping people understand how to invest in syndications, helping each other, right? It was all about the community. And, I'm sure we'll talk about this, but, our passion for the community was the culture that the members of the community built. And that was the one thing that we were really, really proud of, the number of LPs, limited partner investors that we've helped. And we realized that our resources, we didn't have the resources to continue and to do all the things that we wanted to do for our community. And so we needed some outside help. And that's when we partnered with Bigger Pockets. They run the largest real estate community in the world, and they focused on active. And they were going to start into the passive market where they're helping syndication investors. And so we thought it'd be great to partner up because we had the experience of building that community, and they have the resources and the experience of a larger community. So we merged, and as you said, we became Passive Pockets. So Left Field Investors is now Passive Pockets, and we're super excited about it.
That's awesome. What is staying? What is changing? I guess let's not. There's a lot that's staying the same. What is changing? What is Passive Pockets doing that Left Field was not doing?
Well, aside from, like platform changing from one website to the other, that's been a challenge. It always is, right? And people don't like change. So that's been some of it. But, the thing that I've been most impressed about, and we were totally transparent with Bigger Pockets from the beginning, that the value of Left Field Investors is the culture, right? Bigger Pockets could go out and get 1,000 or 2,000 people and start a community tomorrow, right? But what they didn't have was the culture that we built. So that is staying the same, but there are things that are different. And I think most of those things are positive because Bigger Pockets has resources that we didn't have. So for instance, we have a sponsor review tool on our website where you can go and rate sponsors and then, 5 stars or whatever. And we had wanted to do that and had it on the back burner for 3 years. We finally got it done just prior to the merger. But that's the kind of thing that Bigger Pockets could turn around in 2 months, right? So these
Mm.
resources that we've always wanted. We did a master class in introduction to real estate syndications a few years back. Bigger Pockets did an update, and they did it in a month. And now we're planning on doing other master classes. Maybe each asset class gets a a master class in it. And so those kind of things that Bigger Pockets is really good at content and production and things that we just didn't have the resources for. They're going to have that. So I think the biggest change is going to be we're going to be more consistent with writing blogs and getting out education, whether it's written, video, or the podcast. We're just going to have a lot more content, quality content that we're able to use because we're leveraging the resources that Bigger Pockets already has. They already have the team of writers and video production and podcast producers. So it's really just going to kind of professionalize left field investors. And what we've talked about and what Bigger Pockets is super not concerned, but they're really thinking about this is, again, I keep saying it, but the culture of LFI and what we've built, they don't want to change any of that. They want to enhance that with the resources and just kind of build the community in the way that we built it. So it's really just a different name and more resources is kind of how I'm looking at it.
Yeah, that's got to be the biggest challenge. How does it stay kind of small feeling while still
Yes.
expanding and growing? Because LFI is this small community of
Yeah.
like-minded people that are trying to passively invest in real estate and want to do things the right way. And that's why they joined the community. They didn't join the community because there was thousands and thousands and thousands of people there, and 99% of them don't have a clue what they're doing. Like, that's not why they joined. And that's, of course, what you kind of would worry about with the Bigger Pockets taking over, is
Yes.
that all of a sudden you've got these elementary level people that are a part of it, and they drowned out the experienced people, and eventually the experienced people are like, whatever, I'm down, I'm out, right?
Yeah, and there's a difference, and I'm worried about that. I was worried about that. But the difference between Bigger Pockets and Passive Pockets is Bigger Pockets, you will get brand new people
Yeah.
who can just go onto the forum and just start saying stuff, and you don't know whether it's true or not, right? But the Passive Pockets, people are at a different life stage. One, it's typically you're older because you have to have capital for this type of investing, right? So it's typically not the young hustler. I mean, we do have some of those. But also it's a more closed community because to access our forum and a lot of our resources, you have to pay, right? There's a membership fee, and it's not
Yep.
exorbitant, but that is kind of a blocker where, the one thing we've never had in our community are people posting inappropriate things or fights on the forum, or people disagree sometimes, but it's always very collegial and helpful. And our whole mission is to help each other move forward. So and I think that's the thing, is we have a good chunk of people coming over that are used to the culture. So the new people that join will just adapt and hopefully assimilate into that culture, and we won't have those issues. But that is something that we were very thoughtful about, and how can we make sure that we maintain what we've built? Because Bigger Pockets isn't just going to buy a company and then be like, okay, now we're just going to change everything, right? They liked
Yeah.
what we did. And I was impressed at the alignment. Every meeting we had, we would say something and they'd be like, yep, we'll keep doing that. Or, sometimes they had thoughts of, hey, here's how something goes in the syndication world. And they're Bigger Pockets, right? So you just assume that they know more than us. But I'm like, we've been working in this little niche. We have some knowledge, and we'd share it with them, and they would change their stance. They weren't, dictating from above. They are very
Mm.
much about teamwork, and they have been from the start. And that's why we were confident that this was a good choice for our members. Because we've always said at LFI, and we've tried to maintain it, is, we're going to do what's best for our community members first, while
Yeah.
recognizing that we're a business and we have to generate revenue, but that's going to come second. There were opportunities that we passed on that would have made us money, but wouldn't have helped the community. And
Mm.
Passive Pockets is committed to that same philosophy. It is a business, right? We cannot run this for free. We'd like to, but that's not how the world works. So we
Yeah.
need to make
Yeah.
money, but we want to do that in service of the community, right? Because without our members, we don't exist. So that's the mindset, and the folks at Bigger Pockets have bought in from the start. So it's been a great journey.
How is Passive Pockets? How is it let's talk about how is it beneficial first to passive investors or people, anybody who's looking to potentially passive invest, and then how is it beneficial to the syndicator, the sponsor,
Yeah.
and why should each of those different groups join?
That's a great question, and I think I'll talk about the LP, the limited partner first.
Yep.
I don't know how you do this without a community. And, whether it's left field investors, passive pockets, I've always said I'm completely biased, right? I think passive pockets is the best community out there, but there's other ones. And so I think everyone needs a network and a community to do this type of investing because, as I said in the open, it's long-term, illiquid, and out of your control. So,
Mhm.
I vet operators by asking someone in my community, have you invested? Yes. Okay. Give me the story. Talk to me. And I won't invest with a new operator unless I get a referral from my community. Right. And so that's important to me. And then we vet deals together. We published a book that basically talks about, Steve Sue, one of the founders of LFI. He wrote a book that 14 years he's made, 20 different mistakes that he wanted to share, or heard, or some of us have made those mistakes. And so we learn from others' experiences. And it's not like the stock market where you can get out and get in whenever you want. It's not like active real estate where
Right.
you're in total control. So having a community that can help you and is in the same boat when a deal goes bad, you all talk together and like, okay, how can we fix this? Or what do we need to do? Or what did we learn from this? So I think it's super valuable for an LP investor because it demystifies everything, right? If I know 5 operators and everybody else knows 5 different ones, all of a sudden I know 100 operators, right? And so it's just super helpful that way. So I think education and just networking is why an LP should join a community. I
It's a
recommend Passive Pockets, but any community.
Yeah, it's a huge resource too. I mean, that's one of the biggest
Yeah.
questions I probably hear over and over is like, how do I find a syndicator that's good? How do I find somebody that's good? How do I even find somebody, quite frankly? Like,
Right. Right.
well,
Well,
join a community.
yeah. And I mean, these investments often can't even be advertised, right? They're hidden.
Yes.
And it's not like the stock market where you grow up and you get a job and the old guy in your office is like, hey, don't forget to join your 401k. And everyone knows about this stuff, so they understand it, or at least they think they do, so they just do it. It's super uncomfortable to be in the alternative investing space and syndications. Go out your front door and start talking about syndications to your neighbors, and you will find out that they all disappear because they don't understand it. They don't
Yep.
believe it's something that they can do. It's so part of our mission in a community is just to educate people. You can do this. And you know what? You'll make better returns. You'll save more on taxes, which is the largest eroder of your wealth. So you'll
Mm,
eliminate or reduce your taxes legally, and you'll end up with a bunch more money at the end. But the challenge is, okay, I like that. How do I get there? Right?
yep.
Most people don't have the time to dig into books and podcasts and figure it out all on their own. So join a community. You're still going to have to work for it, right? But with a community, you'll have others that are on your path, right? That's one thing. The first thing I did when I started getting into this is I found another guy, Ryan Stieg, who ended up being another founder of LFI. We met at a conference and we're like, hey, let's just do a weekly call because we have so much in common about this type of investing. And look what that
That's
turned
super.
into. That
Yeah.
yeah, that turned into a community, but it's hard to find. So that's why I think communities are important for the
And
LPs.
and I think within passive pockets, I you can find a community within the community, right? And so if you're as an investor looking for cash flow, you'll find the people that like cash flow and look at those deals that are good cash flowing deals. If you like new development or higher risk value add deals, you'll find those people too. And so I think that's the another beauty with the a group like that is you can actually find a group within the group.
And they do, right? They find each other. They find a pocket of 5 people here, 10 people there. We have
Yep.
we have groups, right? So there's a Seattle group that they get together in person. There's a North Carolina group, a New Jersey group. There's a women's club where the women get together and chat because, let's be honest, in most of these, conferences you go to, it's a bunch of guys and it's intimidating to walk in there and be different, right? So we started a women's club. Same thing with young people. We started a next generation group because again, you walk into these things, it's mostly guys in their 40s and 50s and you're a 30-year-old man or a 40-year-old woman, you don't see anybody like you. So we started all
Yep.
these groups and we're empowering our community to start other other groups, because you're right. We have a big community, but you can make it small. And that's the way you really get effective. You get the knowledge from the whole group, and then you find a few people to go on the journey with you, right? Where like you find your Ryan is what I call it,
Yeah.
where, Ryan and I have gone the same path for the last few years, and it's super beneficial.
Yeah.
But the second part of your question was, what's in it for the operators? And, that's where at LFI and at Passive Pockets, you walk a fine line, because we want to be neutral, right? We
Yeah.
want to provide education and we want to serve the LP. But we also want to provide the operator with a way to interact with the LPs, right? So there's several ways you can, as an operator, you can, there's a list of syndicators on our platform, and you can list, I'm not going to go through everything, but you could put some information about your company on the website, right? You can pitch a deal to the community. You can jump in. There's different parts of the forum, right? The forum is one of the most powerful things we have at Passive Pockets. There's a private investor only forum, which is just for LPs, but there's also a general forum where operators can join and they can interact, right? So they can just share knowledge, and that's the goal, right? To show, hey, how much are you willing to give to the community and share it with them, and that's how you develop relationships. And then you can get more investors because you've shown that you know what you're talking about and you're willing to share it. So we give a lot of different ways for operators to interact with community members, but we also have a walled off place where the LPs can just kind of chat on their own and not have someone trying to sell them something, right? And that's one of the things, people sometimes jump in, operators, and like, oh, I got to go tell everybody about myself. And really you got to lead with content, not with, hey, look at me kind of stuff. And that's the most effective, at least.
Yeah, that makes a lot of sense. I like that there's the two, kind of that wall, the separation, because as an LP, you want to ask your question, and you want to feel like it's being answered by another LP, not by a GP that has a biased stake in answering that. When you go on to bigger pockets, I can answer anybody's question. So if somebody asks a question about syndication, I can go on there and I can answer their question. Of course, I'm going to be biased because it just naturally I am. I mean, I'm a syndicator. Like, of course, you should invest in one of my deals,
right?
But as an LP to LP, I feel like you'd get more genuine response, sometimes more guarded response, maybe not necessarily always the best response or better response, but it's a non-biased response. I think that's super valuable.
And it's complicated, right? Because what we miss out on there's a lot of operators who are LPs, right, that invest in other people's deals, and they know the business, so we'd love to have their content. But if someone on the forum is posting about ABC syndicator, and they know that person can read their post, they're gonna withhold, right? And we found that because when LFI started, we were open, anyone could be in the forum, and we had a few operators who didn't play nice, and people said, hey, this operator said this or that or whatever, and the operator came out guns blazing, right? Instead of trying to understand what the issue is and solve it, they were just like super defensive, and it just got ugly. That's the only incident we've had in our forum that we had trouble. So then we're like, okay, we'll just separate it off so LPs feel comfortable discussing things and saying, hey, here's where I had struggles with this operator, or this one was great, or whatever, without the operator being able to see it. And then if you want to post something more broadly, there's a section where the operators can come in and see your comments and have discussions, because what we don't want to lose is there's some operators who share fantastic content with our community in the forum. And we want that, right? We want to encourage that.
Yep. So you're saying until I retire, I can't join the passive side, even though I passively invest.
Yeah, and that's the bummer, right? We've been round and round with operators on this, because they're like, well, we're LPs too. Yeah. And we're like, well, we got to draw a line somewhere. So hurry up and retire.
Right. I get it. And I actually like that you do that. I think that's good because you want people to, I guess I can see good and bad coming from it, but the good is that you want people to be able to be open and not feel like they've got the GP that's going to threaten them, sue them, whatever, that they can talk about their experience and they don't feel like that. The bad is the GP doesn't get an opportunity to respond, but
right. And what we've done is, there's been a few times where people start saying something about an operator, and it's if operators we know, and we're like, I don't know, that doesn't sound exactly right. So we will ask the LP, hey, can we anonymously send an email with your post to the operator and just let them comment, and we'll post that on our forum. And so we've done
Mm,
that, and the response has been phenomenal,
mm,
because usually when the person when we do that, the operator can then share their story, give their side of it, and then the person that originally posted a lot of times like, oh, I didn't have those facts exactly right.
mm.
So we try to be fair. We don't want anybody just posting anything, right? We ask that it be, if you're talking about somebody else, let's stick to facts and not feelings, kind of stuff. And that's just the way people are comfortable sharing, and in a fair way, right? Because we're not going to be there where we're just dishing on operators. I mean, there's no use in that, right? We're trying to learn in every case.
Yeah. So left field investors, now passive pockets. What is Jim's riding off into the sunset on a white horse? Like what's next for you?
Well, what's next for me is making sure that LFI lives on in PassivePockets. So
Yeah.
I am, the four founders who are mainly working in the LFI business. We are all still working with PassivePockets. We're on calls every day with the team over there,
Mm,
and our goal is to make sure that the community lives on. That's why we did this. But in the long term, I'm host of the PassivePockets podcast, and I will remain doing that for months, if not a year or so. But when I started Left Field Investors, I was kind of going to retire and become just a full-time investor. And I created a job for myself with this community that I love and am passionate about. And so I'm going to stay a member of the community. I'm going to stay involved in the community. But at some point in the near future, I will probably have a much less active role in PassivePockets and will become more of a just an actual LP member of the community.
yeah. Yeah. You're gonna be still in it, but in it just as a LP,
Yeah,
as a guy giving advice, taking advice, and being a
exactly.
part of the community. So that's really cool. You mentioned earlier that when you started, you had your own single family home that you were, accidentally turned into a rental and
Yeah,
you're making money on it. It was good, right? It was good enough to where you're like, wait a second, what's going on here? Maybe I was missing something.
yeah.
But then you said you were buying turnkeys and you're using property managers and all that kind of stuff. I think that there's a miss there. A lot of people think that buying turnkeys, using property management companies, that's very passive. How would you relate that to a syndication?
I wouldn't at all. It's not even close to the same thing. Now, it is definitely more passive than, buying a rundown property, fixing it up yourself,
Yeah.
flipping it, or holding it as a rental. But, hiring a property manager does not make it passive, right? There's still all
Mhm.
kinds of things you have to do. If I'm an owner of a syndication and there's, a roof needs replaced, okay, I get a note about it in a monthly report, right? If I'm an owner of a turnkey single family home and a roof needs replaced, I'm going out and finding a roofer, right?
Yep.
Or I'm trusting my property manager to go out and find a roofer. And then, maybe I'm telling my property manager, hey, go get two quotes. And so I'm actively in the business as much as I don't want to be. Those turnkeys, some of them are more passive than others, but finding the super passive turnkeys is harder than you think. I owned at one point, I think 12 single family homes that were supposed to be turnkey. And every one of them, I was fighting with property managers. There were repairs. There was, they rehab the
Yeah.
house so you won't need repairs. It's just not true. So I think the key is, you got to go in eyes wide open okay, we all want real estate, right? You're listening to the show, you're interested in real estate. So you got to decide how active and how passive you want to be. And then you need to realize that there is a spectrum, but if you are managing a property manager, if you are buying, the property on your own, you're going to be way more active than a syndication, right? A syndication, I can't do anything. I do it all up front. And then after the fact, it's out of my hands. And I like that, but you lose a lot of control. But to balance that out with having to manage the asset is not something I was willing to do. And so it's not till years later that I figured, oh gosh, this isn't passive investing what I'm doing. This is active. It's on the passive side of active, I suppose, but it's still every day I'm talking to property managers, digging into spreadsheets and doing all this stuff where as a syndication investor, I'm just reading reports right after I've made the investment. I do a lot of work prior to the investment. Once I send the wire, I'm reading reports. I'm hopefully collecting distributions, and that's it. So they're completely different in my mind.
Yeah. I have a single family, one to four family portfolio that I still have. It's like I keep selling I'll sell like a building or two a year because I get pissed off that like something happened and a tenant moves out and I'm like, forget this building. It's getting sold. Right.
Yep.
But I still have a handful of them and maybe two handfuls of them. But yeah, just today, I have a third party property management that I hired several years ago. And just today, getting emails that I got to respond to, got to get quotes for flooring. And it's like, oh man.
It's
so that one's on the chopping block soon.
Right. And it doesn't have to be that way. That's the thing. Yeah. I think, as soon as I found this syndication world, I'm like, oh, that's for me. Now, for some people managing those single family rentals, perfect. They like it, and the returns, honestly, my returns in syndication investing are probably better, more diversified because I'm not just in, rental housing. I'm in all kinds of other asset classes. So, I think it's a great way to start. And you see, that's why it's interesting being part of Bigger Pockets now, as you see, and all of the founders of Left Field Investors started on Bigger Pockets, right? We started as single family investors, turnkeys and things like that. And then once we found syndications, we were like, oh, this is so much better for us, right? And so that's part of the reason Bigger Pockets was interested in Left Field Investors, is because there's a cohort of people who kind of graduate from Bigger Pockets once they've had all of their active investing and they realize that maybe there's something else out there.
Yeah.
And now they can graduate to PassivePockets.
Yep. Jim, I got you get a phone call from a friend or somebody that's on PassivePockets and says, hey, I met this guy, Todd Dexheimer at Endurus Capital. He's got this deal. Looks really good. What do you tell them to look for? Hey, I want you to look for these, call it 2-3 things, whatever it is. What are the big things you say? Here's what you should dig into first.
Are you talking from the deal or from the operator? About the operator or about the deal, or both?
It could be both. It could be one. Yeah. Like first steps as a passive investor. And I'm saying, hey, I got this great deal. It looks really good. I'm ready to put 100,000 into it. And you go, whoa, time out. Did you look at X, Y, what did you look at?
I think the first thing is the operator for sure, right? I want to know, well, one of the main thing that I look for in an operator is communication, because as we've kept saying, long-term investing, completely out of your control, illiquid. Yeah. I want to make sure that I get into business with somebody that I can be in business with for a number of years. So what am I looking for? Communication, right? I want to know, are you going to communicate effectively with me before I send you my money? Because if you don't do it before you have my money, you're going to ignore the heck out of me once you have my money. So I'm testing you. I'm going to look at the deal and I'm going to come up with some questions, even if I don't have them. And I'm going to send them to you, and then I'm going to have some expectations. I'm going to expect that you respond to me within a reasonable amount of time, 24 hours-ish, right? Or at least to say, hey, Jim, I'm traveling. I'll get back to you, or something, right? I want to know that you're reading it. And then I want to see what the quality response is, right? Are you going to say, Jim, I answered all those questions in the webinar. Go look at that. Because I'm going to say, I watched the webinar, right? I'm asking you the questions. I want to know that you know your deal. Thank you very much. I'll see you later, right? So I'm going to ask some questions. And I'm going to do it on email most likely. And then once I get the responses, even if that answered everything, I'm going to ask more questions, because I want the operator to know that I'm a little bit of a pain in the butt, right? I want to know stuff. And if you don't want that type of investor, then you're going to tell me by giving me a poor response, and then I'm going to go elsewhere. Most often, quality operators will either answer those questions and thank me, or they'll call me and say, hey, let's dig into the deal, right? So communication is super important to me, because it's all you have once you send that wire. You have nothing else. And so I want them to prove it to me. then the other thing, like I said, you're going to be in business with this person 3 years, 5 years, maybe 10 years. So I want to like them. I don't want, if I dislike you, I'm not investing with you.
Yeah.
And the reason is because if I dislike you, I'm going to dread having to make a phone call, especially if the deal isn't going well. I'm not going to want to have these conversations with you. So I want to have a relationship because we're business partners, right? I'm a limited partner in your deal, in that LLC that you establish. So I want to have business partners that I like. That's
Yeah.
important.
You don't want to feel uneasy. If you're feel uneasy about that person, that's just
Yeah.
not you're always worried about the
Yeah.
investment. Like
Right.
after you make it.
Right.
Oh,
Move
that
on.
first
Right.
communication part it's funny. So back when I was flipping houses, I used to take I would bring on an investor, and they would invest. They would put the money down. I'd give them a phenomenal return typically. But I had this guy who's going to invest in the deal, and I sent it over to him. Yep, I got this. This is great. I'm going to invest $100,000. Great. I can't remember exactly how the communication went from there, but it wasn't good. I
Yeah.
wasn't I wasn't sending him updates. He wasn't asking for updates. I wasn't sending him updates though. And we get to where it's time for him to wire the money just a couple days before closing. And I call him up and tell him, closing's happening, and I'm getting an email out to you with the amount and the wiring instructions. He's like, "What are you talking about?" I'm like, "Well, for the deal, we're doing together." He's like, "Oh yeah, I didn't even know that was still going on." He's like, I'm out. My
Oh,
money's tied
wow.
up." And I'm like,
Wow.
and I blamed it on him. Like, I'm like, internally, I'm like, this is all this, like this guy, what a jerk. I can't believe he
Yeah.
did this to me.
Yeah.
But as I looked back and reflected, and I got the deal done happily, got somebody else in, got the deal done. But as I look back, I'm like, you know what? That was my fault. I didn't communicate properly with him. So now when we get a deal under contract and we're getting out to the investors, and I got investors that are starting to do commitments on it, I'm sending out, a cadence of emails. Like,
Yeah.
it's not just you make the commitment and you don't hear from me until the day of closing. Congratulations, we closed. Like, no,
Right.
that is not a good approach. Even if you're not asking questions as a GP, you should be giving answers. Like,
Right.
just
Yeah.
over communicate. Look, Jim, if you don't want to read the email, you're just gonna click delete, right?
Yeah. No,
But
it's critical to communicate because that's all you have, right?
yeah,
Um, so but then that's the operator. Then there's a few deal things that I would look at also. I mean, there's a lot of deal things I would look at, but
yeah,
a couple of things that I really focus on are rent increases or now maybe not increases, but I want to know that they're reasonable, right?
mm,
And this is just like I don't want to re-underwrite your deal. If I
yeah,
vetted you as an operator, I'm going to trust and I will have figured out by talking to you and emailing you that you know the deal and you know how to underwrite it. So I'm not going to re-underwrite it, but I'm going to spot check things. And so,
yeah.
if you're projecting a 10% rent increase in year one, okay, well, you know what? They don't all renew on January 1st. So how do you get 10%
How do you get
on
there?
renewals that are, probably throughout the year? It just doesn't seem realistic. Or if in the market, rents are going down and you're already at market rent, say when you're buying it and you're saying, well, I'm going to do some rehab and then rents are going to go up 12% a year. It's just unrealistic, right? So I look for unrealistic assumptions. Then, I'll look at the taxes because most of these buildings, depending on the state, the taxes are reevaluated after a sale, right? So taxes are likely going to go up. So in your pro forma, did you just use last year's taxes and you're assuming that's going to be the tax for the next 5 years? Or did you put in a reasonable increase based on how
Yeah.
taxes happen there? And
And
then the last
insurance.
thing, and insurance, yeah, all of
Yeah.
that. And then
Yeah.
one last thing I'll mention that I look at is the vacancy, right? Because
Mm,
I remember when I was investing in turnkeys, I just put in 5% for vacancy, right? But that was, there's a whole bunch more that goes into vacancy, the economic vacancy than just how many units are actually vacant. So I look for realistic numbers there. And so those are just a few things that I dig into. And at Passive Pockets, we have a deal analyzer. I can throw all the pro forma information in this deal analyzer, and it doesn't tell me whether to invest or not, but it tells me red flags, right? Things will turn red if they're out of the, normal, what we call normal range. So,
mm.
if economic vacancy is or total vacancy is between, more than 5% or more than 10% or less than 5%, I guess I should say,
Yeah.
that's a
Yeah.
red
Yeah.
flag. So just things like that. And then I learn, from doing it so often, I'm like, okay, now I know what the 6 things I'm going to really spot check for. And it all boils down to realistic assumptions, right? Because as we talked about, I think before we were recording, the only thing you and I know about the pro forma that you send out is that it's wrong, right? It's going to be higher or lower, but it's not going to be exact. That's just not possible because these are
Yep.
forecasts. And so I want to know, are you forecasting things conservatively? Everyone says they do, but I'll tell you what, when you dig into those pro formas and you just look at a couple of these things, rent or vacancy, you're like, oh yeah, okay, it's conservative, but you slipped something in there, didn't you?
Yep.
So those are the kind of things that I look for.
I saw an offering the other day in a market that has decreasing rents and decreasing, fairly significantly when you're looking at rents, and they were underwriting 3% rent growth starting in year one every single year. And I'm like, wait a
Wow.
second now. The rent in that market is decreasing. At the time, it was like 4, 5%, something like that. It's like rent is decreasing by 4 to 5%.
Yeah.
There's a huge amount of new deliveries happening, and you're going to somehow increase by 3%. So no, yeah, get to know the market a little bit and understand what's going on. If
Right.
rent is increasing by 3% and on the pro forma, and the market currently is increasing by 3 to 4%, that's different. Like that,
Right.
okay. Now
And it's all relative to where you start
all
too. I mean, if
relative.
you if you have if you find a property that the rents are under market rent by 20%, and then you say, hey, I'm going to increase rents by 5% a year, okay, that seems reasonable, maybe even a conservative. But if
Yeah.
you're already at market and you say you're going to do 5% a year in a market that's decreasing, I mean, that's crazy, right? So it's all relative. And that's why you need to dig into their assumptions, but also look at where rents are in that market.
Will you invest in a deal with floating rate debt?
I would do it a lot more carefully than I did in the past, right? And
Yeah.
there's different types of floating rate debt. There's the bridge debt that everyone got in trouble with, and there's the agency floating rate. And the agency floating rate debt has a longer amortization period, a longer term.
Yeah.
So you probably won't have to, the rates will go up, but you won't have that 3-year rate
Yeah.
cap
Yeah.
issue that bridge debt had.
You're not staring down the barrel on those.
Right, right. And so I think I would do bridge debt very, very carefully, completely understanding it with a low LTV, perhaps. Adjustable rate agency debt, I would do also a little bit more comfortably than bridge debt, especially we're in a different time. Right now, interest rates are probably going down. So I'd be a
Yep.
little bit more comfortable. But I'm going to pay a lot more attention to that in the future. That's one of the big lessons I learned is that debt matters. And,
Yeah.
you never know when interest rates are going to go from 0.25 to 5 in a year, right? I mean, that's crazy. So
Yeah.
yeah, I'd be a little bit more defensive on it, but I'm not saying no to it. I is deal by deal basis.
Yeah. Yeah. Good. All right, Jim, I got a couple last questions. I probably asked these before. Actually, I know I asked these before, but they maybe have changed. What's a favorite book you can recommend to our listeners?
I'm going to go with the book I mentioned earlier, Avoiding Rookie Passive Investing Mistakes by Steve Sue. It's available as a free download if you join Passive Pockets, or if you search it on Amazon, you can buy the old Left Field Investor version, which had a slightly different title. But it's such a good book. It's a quick read. It's very short, but man, it has 20 mistakes that people in our community have made, and it just, this is what you do. You learn from others' mistakes, right? I don't want someone to go and make the 20 mistakes that I made and lose the money that I lost because I made those mistakes. So I just think it's a fantastic book, an easy read, and it's a must read for any passive investor in my mind.
Awesome. What are your 3 pillars of wealth creation?
Yeah, so I think there's 3 things that I try to focus on, and obviously I think you can guess what the first one is. That's community. I think is just critical for this type of investing, for any investing really, but especially this, to find a community, find a network so you can go through this journey with someone, especially in the alternative space where it's a little bit more scary, a little bit harder. It's just a different animal. So
Yeah.
community for sure. And then patience. I think I certainly love to chase the shiny object, and I've had to learn that 90% of the investing I do is just going to be boring stuff that is not interesting at all, but it's the stuff that's going to make me money. And then I'll take 5 to 10% and do something I don't want to say stupid, but more exciting that, there's risks that I'm going to lose that capital, but every once in a while I'll get a big gain on it. So, and it also just keeps me interested and keeps me going to find these new things. But
Yep.
patience means, MC Laubscher is an operator in this space, and he says JOMO is what he goes for, which is the joy of missing out rather than the fear of missing out. And so that's what I'm trying to do, is see some opportunities pass, and I'm like, you know what? That's probably a great opportunity, but I'm just going to be happy to pass on it because I need to practice patience. And then lastly,
Yep.
consistency. You got to be consistent. You got to be consistent with your education, with reaching out to others, with learning, and then with investing. And that means, if you come into some money, you don't have to invest it all tomorrow or next week. You can take a year to allocate your capital. That's part of the patience, but it's also consistently allocating your capital and not chasing after deals. And, when you send a deal, doesn't mean I'm just going to run and invest in it. I'm going to be consistent with the way I look at a deal, the way I vet an operator, and then how I allocate my capital. So patience, consistency, and community are the three pillars, I would say.
Love it. Love it. Jim, really appreciate it. PassivePockets.com, listeners, it was where you can check out, Passive Pockets. It used to be Left Field Investors. Is Left Field Investors website still up?
No, it goes right to Passive Pockets.
It goes right to Passive Pockets. Yep. And then, Jim, how can our listeners get in touch with you if they want to connect?
Passive Pockets is the best way. You can do a 7-day free trial, and you can jump on there and private message me. I'm there. I'm on LinkedIn. I'm happy to chat. I chat with LP investors all the time and share experiences. So always happy to connect.
Jim, really appreciate everything you do. I think this, Left Field Investors, now Passive Pockets, is an amazing resource for people. Hopefully, more and more people continue to join it, and it just becomes better. And the culture, of course, stays the same. It's a great resource. I'm really, I think it's awesome that you did this for people, and it turned from hey, you're checking, you create a community for yourself in a selfish way, but then you created something really awesome for so many people. So give you kudos for that.
Well, I appreciate that. And there's no one that's gotten more out of the community than I have. So you're right. It is a selfish endeavor, but it's also been great being able to share this with other people. So, also thank you very much for having me on the podcast. As usual, it's been awesome.
Awesome. Jim, have a fantastic rest of the day.
Thank you. You too.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.